We believe that Justin should expand their business and enter into the chip market.
I'm Megan Apotheker.
I'm Bailey Them.
I'm Rory Smith.
I'm Oliver Ledoux.
And I'm Grady Witt.
The chip category has the highest revenue and growth rate compared to any of the other categories we looked at. It is the most financially appealing and it has the largest market to enter, as well as giving us the opportunity to expand past the nut butters and into other markets. And we will explain the market attractiveness, product fit, look at the financial aspect, and go over operational feasibility. And now I'm going to be passing it on over to Megan, who will be talking about market attractiveness.
Entering the chip market is very attractive because it has the largest market at $25.4 billion and the fastest growth rate at 9.9%. This tells us that the chip market has a large number of consumers and a high revenue potential. While there are many dominant competitors, Justin's will be able to bring in their existing customers by marketing their chips toward their target market. Their primary audience consists of consumers who are looking for natural and organic products, which they would incorporate into their chips. Their secondary audience is people who are looking for nut-flavored products, an untapped market in the chips industry. This would help eliminate the issue of competing brands and make the market very appealing due to its large size and rapid growth. This allows for many expansion opportunities within the market. Now I'll be passing it on to Bailey, who will be explaining our brand fit.
We aim to create a new corner in the chips market by introducing a product that not only aligns with our core values, but also attracts a new audience of consumers. Justin's brand has always been defined by its commitment to simple organic ingredients with great values. This standard will continue as we introduce a new offering in the chips market, ensuring it reflects the same high quality principles that our customers love. Just as our customers rely on Justin's for portability and great flavor, we see an opportunity to extend that experience into the snack aisle. With chips, we can provide a convenient, flavorful option that keeps our core promise, delicious, wholesome ingredients that are perfect for on-the-go lifestyles. While chips may seem like an unconventional addition to our current nut butter offerings, we see a perfect opportunity to expand our current products with this new addition. By creating nut-flavored chips, we can integrate them with our existing products, positioning our nut butters as perfect dips to pair with these new chips. This expansion into chips not only brings a new product to the market, but also broadens the Justin's brand presence in the store. Consumers will now find us in the snack aisle offering more nutritious options that cater to a variety of snacking needs, further solidifying our role as a trusted, health-conscious brand. With creating healthy, nutritious snack chips that consumers can take on the go, we can tap into a wider market with huge financial potential, which Grady will now give us more details on.
Thank you, Bailey. Chips has the highest growth rate at 9.9%, the highest cumulative operating cash flow at 15 million, and the highest net present value at 8.7 million, which is a key determinant if investment will be profitable in the long run. The highest for all three categories. Chips leads 3 out of 5 categories in operating cash flow, 15 million, with almond milk 3 million behind chips. Next, the income margin at 30.53%, and the income margin gives us an insight into whether a company generates enough profit from its sales and whether operating costs and overhead costs are under control. So this is a good sign here. And for the third category, net present value, and like I said earlier, it's a key determining factor if an investment will be profitable in the long run, with the close behind almond milk being 2 million behind chips. And for the fourth category, internal rate of return at 43.13% is second behind sunflower seeds at 58.98%. Internal rate of return estimates the profitability of an investment. And for the final category, payback period, is how quickly you'll recoup your money. And again, chips has the second highest at 2.69, behind sunflower seeds at 2.50. Overall, chips dominates all 5 of these categories. At a glance, the one-time startup cost 1.5 million, the year zero capital expenditure 4.5 million, and the marketing expense are all higher than other options due to brand positioning and product launch. Justin's can leverage existing supply chain and operational efficiencies to optimize cost. Stronger supplier relationships ensure higher quality and organic ingredients. Higher price point than traditional chips, but aligned with premium organic branding. Now, Oliver will dive into operational feasibility.
Thank you, Grady. So in regards to operational feasibility, there are challenges. Maintaining just-in-time inventory and logistics efficiency given the rollout of new product category can be one of them. Ensuring a consistent quality and supply from partnerships, especially with organic and healthy ingredients, is where the priority should lie. That being said, we have advantages. Chips excel in the areas critical to customer satisfaction, most notably freshness and portability. These strains align well with the expectations of Justin's customers. Additionally, existing infrastructure and supply chain efficiencies are well suited to introduce new products into the market. And lastly, for operational feasibility, we have opportunities. With regards to opportunities, strengthening supplier partnerships can further optimize operational costs and accelerate time to market. Additionally, the ability to swiftly respond to evolving consumer preferences and market dynamics provide a significant competitive advantage in the snack and food industry. Next, we'll be passing it off to Rory to go over profitability and investment highlights.
Thanks, Oliver. So we're going to be looking at the cumulative operating cash flows across all of the product categories. So as we can see from the charts, chips has generated the highest operating cash flow compared to all of the other categories. While toaster pastries and almond milk have also generated a pretty strong performance, they still are not anywhere near as close as the other categories. And as you can see, honey and sunflower seeds have lower cash flows, which just indicates that there are opportunities for growth or potential areas. And as you can see, some chips have the highest one, so there is a really large opportunity for growth. And understanding these trends will allow for us to just focus our investments on chips. And now I'm going to be passing it on over to Grady.
Good insight, Rory. Regarding this chart here, chips are the most profitable at 32.2% net income margin, making it the most profitable category. This suggests consistent consumer interest and sales performance. Chips play a crucial role in overall business profitability and financial stability. Now, Megan will get into net present value.
Thanks, Grady. Now we're going to dive into the net present value of each of these categories. As you can see in this chart, chips dominate the profitability and investment highlights, as shown with the highest NPV among all of the products. Chips is about 43% higher than toaster pastries and almond milk, 400% higher than sunflower seeds, and 900% higher than honey. Now Oliver is going to be explaining the IRR.
Thanks, Megan. In this slide, we have the internal rate of return for our products, the IRR. That being said, sunflower seeds lead with 28.1% IRR, showcasing high profitability. Next, we have chips and toaster pastries, followed with 20.6% and 19.3% respectively. Almond milk at 18%, and honey shows the lowest at 13.1%. These figures highlight the varied investment potential across all product lines. Next, I'll be passing it off to Bailey to go over payback periods.
As you can see, with the high cumulative cash flows and the second shortest payback period at 2.69 years, we can anticipate recovering our initial investment in just over 2.5 years, ensuring a strong return on investment. However, despite the financial potential, there are important trade-offs to consider, which Megan will now discuss in more detail.
The chip category does have a $1.5 million startup cost, $4.5 million in year zero capital expenditures, and relatively high marketing expenses at 15% of revenue. However, these upfront costs are offset by the category's strong projected return on investment and short payback period of 2.69 years, making it an attractive investment opportunity. Now Rory is going to be concluding our presentation.
Roy, the mic's off. Roy,
Technical difficulties.
you're good. You're good.
We believe that Justin should expand their business and enter into the chip market. The chip category has the highest revenue and growth rate compared to any of the other categories that we looked at. It is the most financially appealing and it has the largest market to enter, as well as giving the opportunity to expand our brand past nut butters and into other markets. We will explain. So, in conclusion, we believe that this is going to have the highest growth rate, and we recommend securing funding and initiating production trials in order to see a payback period within 2.5 years.